Hey everyone, Theta Warrior here. In this video, we're going to be discussing an option strategy called the butterfly spread. Here's an example of one we took in our private trading community this week. You can see that we bought the NVDA 920 by 940 by 960 call spread for paying $2.75. And this screenshot is the result of the trade taken on Friday. So gained just over 330% in a few days. Worked very well to our favor. And I want to discuss why I actually took this trade, how I got into it. And before that, though, I'm going to teach you what is a butterfly, how the structure works. I'm going to show you how to execute it in your brokerage account and how to take profit with it, and some of the pluses and minuses behind the strategy overall. So first and foremost, we'll jump over here to thetawarriorpro.com, and you'll notice on the top we have an education tab. Go ahead and click that. Here's a few articles that I've written that I think are very helpful and useful for all traders, regardless of your experience. And you'll come down here and you'll notice I have here butterfly spreads. So we'll go ahead and click that. In this example, I discussed Tesla, but the structure is exactly the same no matter what stock you're trading. Scroll down here to the bottom for a definition. So a long butterfly spread is a strategy that involves simultaneously buying a vertical spread and selling a vertical spread with the short contracts both sharing the same strike. All contracts traded share the same expiration. This allows the trader a range in which to be profitable surrounding the short strikes, as well as leveraging theta to their advantage. The greater the distance of the wings, aka the long contracts, from the body, aka the short contracts, the greater the chance of profitability and the higher the cost of the position. The goal of the long butterfly is for the stock to be as near to the short contracts at expiration as possible. If the stock is trading at the short strikes ahead of expiration, the position will not be at the full potential value yet, due to the theta decay not fully having occurred. However, it's likely it can still be closed for a profit. Long butterflies offer a trader a great risk reward as they are low capital intensive and offers significant upside. That last part is the reason why I love this position. Does not cost a lot to get in, and if you're right, you can be right in a big way, and that's entirely the goal of options. It's 100% hedged. You can only lose what you put in, and you know exactly what your max profit potential will be when you get into the trade. So you can determine your stop, your take profit, everything right when you get in, which is what you should be doing. So what does all of this mean? For all of you visual learners like myself, we'll come over here to our 3D paint. And remember the examples that, the strikes that we were using were the 920, the 940, and the 960. And forgive my handwriting, it's very difficult to draw with a mouse if you're unfamiliar. So first and foremost, we're going to be getting a long vertical. So +1 here and -1 here. So this is known as a long debit vertical, right? Buying the 920, selling the 940 against it. At the same time, we're going to be selling a vertical, selling the 940 and buying the 960. So this is what it means when I say the short strike is the same and it serves as the body. So our 940 in this example is the body. You'll notice that our long vertical and our short vertical both share the same strike that our short contract is, correct? Coming over here to our broker account, this is Thinkorswim. We're looking at the on-demand feature, so this is not real money. We're looking back in time. The date we're looking at is 5/14. And first, I'll explain to you why I got into this trade. So technical analysis, obviously pretty clear. We have a nice consolidation here after a move up, and we're looking for a breakout, and I'm looking for a move up to this trend line. And our trend line is sitting right around 940, 944 or so. And that's the reason why I chose the 940 to be our short strike, because I want it to be as close to that short strike, our body, as possible. Here's a nice visual. Get rid of that. Here's a nice visual that shows it. So here's our short strike. This here is our maximum profit potential. The closer price closes to our short strike, the more profitable this trade is. Here is our max loss, what we paid for the trade, in this case, $2.75. Oh, and I should mention, your max profit is always going to be the width of one leg to the other. So in this case, it's $20. So from 920 to 940 is $20, or 940 to 960 is $20. So our max profit is going to be $20 with a max loss of $2.75. So again, you get to see how great a risk reward trade this can actually be. This is going to be your lower strike here, and this is going to be your higher strike. So in this case, it'd be the 920, and this would be the 960, and then right there in the middle is our 940. Our break-even point is going to be whatever our lower strike is plus the premium that we paid. So if it's 920, we paid 275. So our break even is a close at 922.75. And then you just reverse that for your break even on the upside point. So this is the structure of how the options butterfly is laid out. Getting back to our chart here, again, bullish on the chart. Coming over here to the flow. This is the historical. We're looking at 5.6 from 5.14. So that's exactly from right here, 5.6 to 5.14. So watching what the options market is positioning themselves for during this consolidation phase. And anyone who's unfamiliar with my trading style, I'm 100% technical analysis and flow based. That's it. That's all I look at. You'll see just a litany of buying, call, bullish activity. Yes, some of this is closing. I do have the below bid and bid filtered off just for the purposes of this video. And we're only looking at trades over 500,000. If I didn't have those filters, there would be thousands of lines here. So just for the simplicity of this video, that's all I'm looking at. But you'll see just a lot of buying activity, millions of dollars worth going out to September and November. And we can clearly see that there's very bullish activity happening in the options market. See, it just goes on and on and on. One line, a few lines in particular I want to look at or show you guys, see it all, just tons of it, was these right here, these 930s going out to July, millions worth, right? Tons. Very, very bullish, and definitely this trader is positioning for a move higher. So we have the stage now set, right? We understand the options market is bullish. We have a bullish chart here on our technical analysis. And basically, I'm just looking for a breakout. So again, the day that we're looking at is May 14th. This is the day that I put on this butterfly. And I'll go ahead and click play here. Again, this is just a dummy account simulation, so none of this is going to be real money. This is simply just to show you guys how it all works. So at this point, I'm ready, right? Any day now, I'm expecting this breakout to occur. And on this particular morning, we got this breakout. So we're looking at 11:24 a.m. East Coast. And right as this is occurring, I sent out an alert to our private community. I'm watching the NVDA 920 by 940 by 960 butterfly, lay out the structure here. Remember, our body is always going to be double whatever our wings are, okay? So there's the structure. And then a few minutes later, actually got into the trade. I got filled at my 275. And here's the official alert for my actual entry. And here is the actual trade confirmation right there. So you can see I got in the 920, 940 by 960, 275. Filled at 11:32 a.m. I'm sorry, 11:32 a.m. Okay, so going back here, that all sounds great. Let's see it actually done, theta. Okay, so first and foremost, you need to pull up your options chain. Very simple to do in Thinkorswim. All you have to do is find your expiration. Again, we've identified that our target is going to be right up in here, this 940. The reason why the butterfly is great is because I don't know if it's going to trade 950 or 930, but I know if it gets in that range, this butterfly is going to make money. So in order to actually execute the trade, all I have to do is find my short body, right? Right click it, hover my mouse over buy, and then come down here to butterfly, and it will automatically generate the correct number of contracts, and it will also populate the next closest strikes to your whatever you right clicked on. So in this case, they're giving me a $5 wide spread. I can click up that I want to buy more, and you'll notice that it always is going to automatically double whatever my wings are. So that's really nice about this. They make it super easy. In this example, we're going to go with we'll go with 5 contracts. And before I get into this trade, actually, let me show you another cool feature. If you're unfamiliar, you can right click on your line, come down here to analyze trade. And let me just get this on the right screen. Here it is. So this is what we were looking at before in this image right here. So on Thinkorswim, you're able to see that actual laid out for you. So the reason why I want to show you this is actually showing us the 920 by 940 by 960. You'll notice that our max profit right here on 5 contracts is right up around $8,000, and our max loss right down there as well, just over $1,000. So the goal of the butterfly again is for price to close as close to our 940, and you'll see our max profit is right there if price closes at 940, which is of course unlikely, but that's the target. And you'll see the profit potential starts to decline as you get further below the short strike or further above the short strike. So you really needed to get as close to that spot as possible. And we can see what happens if we, actually, let me pull this up a little bit. So you can change this, right? Like, let's say we wanted to narrow this a little bit. So we'll change that to the 930 and we'll change that to the 950. So you'll notice that our room to be right is much smaller now, right? So that's why I like to give myself a little bit more room to be right. Of course, your cost is going to drop when this occurs. The narrower you go, the lower cost it's actually going to be. Like if we went with the 935 by 945, that's a very, very tight butterfly. So you can see the window to be right is pretty small. So I want to give myself some room to be right. So that's why I widen this out. 920 by 940 by 960. So I have 20 points to be right in either direction. So that's the actual analysis of the trade. And let's correct that here by 960. And keep in mind, this is a simulated account. Our fills may not be perfect and exactly as I have them in reality, but it does a pretty good job, and it certainly serves as a good example to how to actually do this. So right now, it's trading right around $3. This is actually a few minutes before I got into it, but instead of just scooting this on demand forward, we'll just go ahead and just buy it right here. So it's going to ask us, we want to buy 5 of these butterflies. We're paying $2.98 with a max profit of $8,500. So we're risking just under $1,500 to potentially make $8,500. So we'll go ahead and click send here, and they filled us right away. You can see we paid $2.98 for these, and here is the actual trade itself. You can see we're in the 920, 940 by 960. We're short 10 of the 940s, long the 920, and long the 960. So there's our long debit spread, and there's our short credit spread. So together, they make the butterfly. So there's the actual trade right around the same time that we got in this trade in reality this past week. And we'll go ahead and get rid of that. So basically, you can see price is starting to break out. So again, I want to move up here into this 940. Using this on demand, I'm going to go ahead and jump forward here to the next day. Just bear with me for 1 minute while I correct these times. So we're basically jumping forward 24 hours. We're going to 120 on the next day. And I want you to watch and see what happens here. So sure enough, we got our perfect move right up to our trend line. Of course, doesn't always work out that way, but in this instance, it did. So as soon as this buffers, it'll update our P&L and everything. So you can see in a day, we're already up 100% on the trade. The trade has not fully matured yet because we're not at expiration. So the day we're looking at is the 15th. Expiration was the 17th this week. And you'll see that even though we're not at expiration, because price has moved in our favor significantly, the trade has gained value. We got our breakout, we got our move right to our trend line. Really what we want now in this situation is for price to just stay right here, because if price stays as close to that 940 as possible, our short contract will continue to decay and our 960 will fully lose its value as well. So ideally what you want is your 920 by 940 to be fully in the money and your 940 by 960 to be fully out of the money. Now, again, that's very unlikely that it'll be exactly at 940, but as long as you get close, the trade will have value. So at 930, this spread is worth $10, and at 950, it's also worth $10. So let me go ahead and throw that on there, which will definitely help with the visualization. And I'll bring our P&L back. Let me pin that. So here is the fly layout. I have it set up for what I actually paid, $275. Again, long the 920, I paid $275. So my break even on this trade is 922.75 and 957.25, which is our 960 minus the 275 that we paid. So anywhere in this blue region, the trade is profitable, with our most high potential reward right there at that 940. But like I was saying, if it's up here at 950, it's still worth $10. If it's down here at 945, it's worth $15. If it's down here at 935, also worth $15. So it's nice that, yes, you can put on a directional position. You believe that the stock is going higher, but it gives you a wider net. You have a bigger window for profitability. You can see, and it will be more clear when I fast forward another day. If we had just bought the naked 920, yes, we would be up a higher percentage. We'd be up 120%, when instead right now we're up 95%. So you're sacrificing 30%, right? But think about our risk, and that's the key to profitability with options. Think about your risk first. The cost of this contract was $12 yesterday when we put the spread on. I paid $3. So if I'm wrong, I'm going to be wrong in a much smaller way. And that's the key to longevity, being wrong in smaller ways. So I'm much, much, much less risk than if I'm holding this naked position. If I'm long this at $12, I have potentially $12 that I can lose overnight. Of course, it won't go to zero, but let's say this thing gaps down, that could lose 80% of its value in a day. And pretty quickly. It might happen exactly at the open. God forbid, NVIDIA has some news that comes out and the thing gaps down to 875, 850. You're smoked, right? But with this position, I'm only risking $3. So it actually allows me to put on a larger size, right? I'm still paying a similar amount. I paid $1,400, $1,500 to get in this trade. I bought 5 of these, and I would only have been able to afford one of the 920 calls. So being able to put on a larger size while keeping your max loss in a similar range has all kinds of advantages. And I'll show you one right now. First and foremost is we can trim our position. So let me pull this up. Is it going to be easy on me? Let's see. There it is. So here's our position. Same thing we're looking at over here. I'm going to go right here, right click, create closing order. Sell 5 butterflies. We don't need to sell all 5. What I'm going to show you is how to trim. And again, that's the beauty of being able to put on a multiple of these. If you only have one contract, it's difficult to know when to sell, right? But if you're buying multiples, you can trim along the way and move your stop as you go along. And I think that's the key to managing risk. So let's sell some of these. I go ahead and drop this down to 2. I'm going to trim 40% of the position. And just for simplicity, we'll just leave it right here at 570. See if they fill us there. Hit confirm send. And you can see they filled us right away. Again, it's a simulated account. Likely won't get a fill above your limit, but there it is. So you can see on the 14th, we paid $3, just under. 15th next day, we're trimming at 577. We still have 3 of these open. You can see our quantities right here. We're up $1,500 on the day, so we've already doubled our money, right? P&L plus 100%. Let's go ahead and jump forward one more day. I'm pretty sure you guys get the idea what I'm going after here, so I won't keep going all the way to Friday, but I'll show you one more day. So did I do that right? 13. I think I have the time wrong. Hold on, bear with me. Yeah, that looks better. So you can see price is doing exactly what we want it to do. I'll throw these lines on here so you can see. Came right up to our top wing and rejected, and it's just been trading sideways. That's exactly what we want. The closer, again, to 940, the better. You can see our P&L has jumped. We're up another 35% today. And that is the goal. As long as price is staying in this range, trading right around that 940, let it do its thing. You're going to make more and more money as long as price holds in that area. So again, this is where I'd be trimming, taking some profits along the way, trade up 150%. And you guys already know how this finished. We'll pull that graphic up one more time. So there it is. On Friday, I was able to close some of this for just over a 300% gain. So a really great trade. Got about $11 out of that, just better. So yeah, so that's the power of the butterfly and how to set it up, how it works. Very easy to do once you understand the structure of it. And if anyone is interested in, again, reading up on more of this education material, please feel free to visit our website. I've got a ton of articles on this. Net options delta, straddles, iron condors, vertical spreads. Definitely read vertical spreads before you jump into butterflies because, again, that's just two vertical spreads put together. And then, of course, if you're interested in joining our private community, come right here, Services Elite Sign Up. We have an options room. We have a futures room. If you're interested in both, we have an Elite Alpha where you can join both of our rooms. Trade full time. Both myself and my futures partner, we're in our Discord, very active. We tell you guys, what we're looking at before we get into the trade. Just as I explained to you guys with the flow and the technical analysis and everything that goes behind it, and do our best to, hold your hand while you're, learning the ropes, and also demonstrate by example and actually share our trades with you guys, and in the hopes that you can learn and educate yourself and do this for yourself one day, right? That's the goal. So with that, I'm going to sign off. Thank you very much for watching this video. If you enjoyed it, please like, subscribe, comment, all that YouTube jazz. Definitely let me know if you found this video to be helpful. I'd love to start making more of these, and let me know what you guys want to see and I will make it happen. All right. Thank you guys. Appreciate you. Take care.